Good morning, good afternoon, or good evening from wherever it is around the world that you've joined us today for another of the Icarus Signals indicator tutorial guide videos. Today we're going to be looking at the Icarus Signals auto support and resistance indicator. One of the most important trading tools that we've all got is being able to pick prices or points on a chart or points on any particular instruments price scale that are likely to act as support or resistance, or supply and demand as they're often called. Now, those are going to commonly be areas that we see where price reverses or increases or decreases volume through a particular level. So we've got here again, as we get started, we're on the Think Forex demo account, which we use to record all of our videos. You'll notice as we scroll back towards the Icarus Signals homepage that we've got Axie Trader, or it's now known as Axie, as one of our promoted brokers. So between Axie and Think Markets, those are two that we would recommend people consider. Very well regulated, great customer service. They're domiciled in Australia and around the world, but of course we don't make any real recommendations to which broker people should use, but these are two that we found to be very reliable. So now, without further ado, we'll get into the indicator here. Now, we've got it loaded up on a few different charts so that we can work through some of the different mechanics and inner workings of it. Look, there are a number of different support and resistance indicators available on the market. And aside from having to manually draw these on each and every chart as we go through each of these, the reason why Icarus Signals developed this particular indicator was, one, it was required for some automated strategies that we had integrated with some of our other indicators, including the reversals and the continuation indicators, which many of you may have seen in some of the other videos. But two, as we start to drop different price levels onto different instruments, be they currencies, equities, CDFs, or futures, we prefer to have a simple and well-defined set of rules that will automatically generate key levels of support and resistance, which is precisely what this particular indicator does. Now, it's fairly advanced in respect of the fact that it will produce different levels for different time zones on any particular chart. Now, we've loaded up IBM here being one of the major equities, which is not trending extremely strongly, so therefore is going to have a fair bit of consolidation and backwards and forwards movement, so we can actually see, this is on the hourly chart, how this particular instrument populates these charts. We've also got it loaded up on Apple, currently here at the 1 hour chart, which we will then also go and play around with some of the different time frames, but then also on the Euro, being the 5 minute. Now we'll start with this particular instrument and these particular settings, and we'll work our way through this particular indicator's application with these settings, and we'll show you how it works, some of the different inputs and some of the key different areas where this particular indicator can work very well in identifying some of the different or likely turning points. Now you'll notice that the indicator has been designed so that it draws bars forward in time, and it will automatically regenerate these different levels as the indicator's code starts to pick up areas of swing activity measured against some of the ATR tolerances, which we'll go through shortly, so that we're getting the most suitable, most well-proven levels of price action for us to be able to start overlaying some different indicators and trade ideas. So we'll open up the indicator settings here, and we'll just run through how this particular chart's been set up. Now, there are three different time frames that are going to generate separate horizontal lines being support and or resistance. That allows us to, in this instance, for example, use a 5 minute chart, and we've set the blue line to a 15 minute time frame, which means the indicator is going to look for instances on the 15 minute time frame where price has reacted more so than in other areas. We're then going to move down to a pink line, which will be the 1 hour time frame, which the code is then flicking across to a 1 hour chart and basically looking for instances on the 1 hour chart where price has swung in this 2000 bar per time frame. So it's going to look back in time, 2000 bars, and have a look for different levels where price has been reliable. Now we're going to change all of these to see how it affects the different levels, and you'll notice that as per this particular example, each of these points is proven to be a very solid point of reaction, and we'll then drop in, which we can't see except for here at the very, very top. This is a daily bar. So in 2,000 bars back, this particular level here at 1792 has proven to be an area where the daily chart has had a significant amounts of support and or resistance. So it gives us a very good suite of price ranges for us to look at. And depending on what particular timeframes we're trading on, we're going to have a little bit more of I suppose, a safer basis for entering or managing trades based on each of these levels. So let's have a little bit of a play around with each of the different parameters. These are obviously fairly straightforward. They've got true and false for each of the different inputs. For the sake of the exercise, we'll turn that to false and we'll see the blue lines disappear. Just leaves us with now the daily and the hourly time frame. We'll bring that back so that we've got it here, and we'll set it back to true. And we'll work down to some of these critical inputs, which are going to help us generate the different support and resistance lines on the chart. Now, we can set the width. Now, personally, we've got 2 and 3 being the widths. We want to have the daily or the longer time frames a little bit thicker so they stand a little bit further as we zoom out. And then we've got the swing strength and this tolerance ATR. Now, what these are going to do is they're going to give us the primary drivers between the strength of each of the different levels. Now, the swing strength is generally measured as to how important pivot prices are found. It basically requires this amount of bars behind and forward of a bar to find highs and lows, which then helps us to measure what the strength of the reaction at that particular level is like and whether or not we're then going to draw a support and resistance line at that particular point. Now, remember that I'll calculate this value for all of the different timeframes that we've set into here, in this case, 15 minute, 1 hour, and 1 day. And then we then move to the tolerance ATR. Now, basically, this controls whether or not we're going to draw a line, a support and resistance line, if indeed another support or resistance level shows up close to one which has previously been printed. We want to make sure that we don't populate the chart with a huge amount of lines which then become superseded or a little bit superfluous. So this ATR value helps us to measure in ATR what lines or what support and resistance levels are going to be acceptable to appear on the chart. So we've then got here, based on this maximum bars per time frame, which we went through before. That's fairly self-explanatory. Now what we'll do is we'll turn that back to 500 and we'll see then how these levels will change, because it's going to be reading more recent time frames for each of these values. Now you can see as we go from 2000 to 500, in the last 500 days, there's no daily price levels which suit these particular this particular 5-minute chart, which of course is something that we would expect because the range here is only sort of 80 pips on these very short time frames. As we zoom out, we might see a daily value somewhere, although it's unlikely because we have to go back a long way in time to find something that's reacted on a daily time frame to any serious or significant amount that is going to draw a line. So as expected, there's nothing here. We're only going back sort of 2 or so months. Now you can see as we change these levels that they become much more clearly defined. We've got our 15-minute line here, which has been producing very, very solid levels, including at recent times at this particular point, where price is reversed, approached and reversed on or very, very close to this particular level. And then again, the hourly levels as they're generated then sit below. So you can see that we've got a range of prices here using these particular settings, which we're going to watch fairly carefully for this particular instrument. We're going to open up here again so we can see some of the different benefits of this particular indicator again. Now what we'll do is we'll change this tolerance level to say 0.2 or 0.25, so we'll half that, and we'll see what that then does to the amount of levels that we've got. And you can see that it will then produce quite a few more, because it's basically allowing there to be a little bit more flexibility in where it's going to start printing values. We'll change that back to 0.5 as an example. And there's not a huge amount, but this price action here you'll see appears and disappears with that particular setting. Now remember, we're using a 5-minute chart of the euro, but this is equally applicable to equities and futures and any other range of instruments, which we'll get to in a moment. And as with all of the Icarus signals indicators, we encourage users to basically best fit or curve fit these particular indicators to their particular trading, investing style, instrument types and time frame types. And then save those as a template and then drop them onto a range of different charts or different instruments, so you can get the very best out of that particular tool that's been developed for active traders and investors of all different types. Now I'll open up here again. This is another very important input as well. This is removing the weakest levels. So as in the background the code generates a wide range of levels, what we'll do for the sake of the exercise, we'll put this back down to 0.1 so it produces a lot of levels, which again will be a little bit superfluous. We can see all these here. But because some of these will be weak by nature, we're going to remove 95% of them. And it's going to give us only the very strongest levels. So we can see price here now is basically stuck in between these two elements, these two particular prices, which have been determined as being the top 5% of all reactive price points. We can see as we go back in time that this particular band that we're approaching now, if we can zoom out one more time, is really a critical point. Once we get through this 1716 level thereabouts, there's another longer term hourly price zone between 1685 and 1672, which again will also be significant levels of support and resistance, as we can see generated by these particular areas here. So you can see how those three primary inputs really give us some very, very useful insight into what are going to be the most powerful turning points based on this particular indicator's generation. Now, we'll always start with what we found to be most useful, which is this 80% number. But again, any particular setting from 0 through to 100 is going to give you a range of different results that you'll find will still react very, very well to some of the different points and then regenerate moving forward as price continues on. So it gives us always a live, fully updated and fully accurate insight as to where the different levels are based on the calculations it's done back in time. So it's a very, very useful tool in that regard. And what we'll do is we will just clear out some of these and get this back up to the 0.05 ATR, which gives us some more of the reasonable levels. So that's the 5-minute euro. Now what we're going to do is we'll take note of these levels here, which we've recorded on the 15-minute. And when we then skip to the 5-minute, when we skip to the 15-minute, all of these levels then remain in the same position, regardless of which time frame we're on. So we get a little bit of a broader view of where some of these key critical levels are. Now we get out now to the 1 hour, and we can see that we're still producing 15-minute support and resistance lines, which do work quite well. I mean, you can see them picking up points of reaction all the way through. But in order for us to get a bit of a better long-term picture, what we'd suggest is we then go and change these time frames to something that's more commensurate with the time frame that we're looking at on the chart. In this case, looking at a 1 hour chart, we'll start with a 1 hour. So the Dodger blue support and resistance line is going to be based on 1 hour. The pink is now going to be based on 1 day. And then we're going to change the green to a week. So it's basically going to do the same exercise, but it's going to look back 500 bars. And what we'll do is we'll change that we'll leave it at 500 for now, and we will go and drop that into the chart, and it then produces this for us. So in this particular frame, it's picking up only hourly time frames because it's looked back 500 bars, and the primary areas of support and resistance in that particular period using those particular swing strength and ATR inputs have been identified by these lines here that we can see on the chart. Now, for the sake of the exercise, what we'll do is we'll then go and open up some of these parameters, and we'll look at a swing strength of, say, 3 and an ATR tolerance of 0.25. In fact, we'll change that. We'll try and produce some more. So we're going to look back 5 bars forwards and backwards, and we're then going to have a bit of a look at what that does for us. Again, more hourly lines and more hourly support and resistance, and we can see below, we've then got some significant weekly and daily levels showing up here. When we then go out to the 4 hour, we'll see the same sort of thing. So we can see a lot of price congestion, a lot of consolidation here in these lower levels. And as prices come up and moved fairly quickly through and then start to consolidate again, we're going to then start to generate more support and resistance levels on these shorter time frames. So we'll scroll back to the 1 hour. And we'll go back to something that we know is to be a little bit more reliable, a little bit less noisy. And we're going to edit some of these and go back to the 0.5. Oh, 0.5 settings. Now, again, we can see, as we had before, the horizontal support and resistance lines picking up these levels very, very well. So we get some price action here. It tags that particular point there, here again. There's a lot of congestion and price reaction on this particular level all the way through here. It's come up and tagged the bottom, and then the next point that it needs to get through is this particular level here. In this case, it's 1720. Now, as we said before, this is the hourly support and resistance lines only, because I would assume that when we have a look at the settings, because we're only looking back 500 days, 500 bars, it's not going to be as likely to pick up anything on the daily or the weekly levels that might be of any use. So we'll change that to 1200. And we can see here that as we add in those extra 600 bars, there then starts to become a range of other levels which are much more important on a daily and weekly level. So we can scroll out and we can see just here with these daily levels how the reaction points for support and resistance have been very, very clear. And again, we look up here at the weekly line, and if we zoom out here on the week, we're going to be able to see how these weekly levels are very, very clear as well. So we can see it's picking up all of the support and resistance points, the reaction points on the weekly chart. You can see they act as very, very good turning points. And then we'll scroll back across, find out where we are at this particular point. There's not a lot of weekly price action in this particular point. We're stuck between two bands at that particular point. We'll then change it to a daily, and we can see how we are after this large move up. Now we're stuck in this consolidation zone between about 1610 and about 1930 thereabouts, with a number of hourly and daily support and resistance points within that particular chart. So we'll go back to the hourly. This is giving us a bit of a picture for the hourly chart with some of the different price action that we've got there. Now, for the sake of the exercise, those of you who may have seen some of the other Icarus signals indicators that we've got, we commonly use this auto support and resistance indicator with the reversal and or the continuation indicators, amongst a few others, to give us a little bit of a better idea as to price action around these particular points. So just for the sake of the exercise, we'll go and drop those on, and we can see here, for example, we've got a clear entry on the close below the ATR band and through the Icarus reversals, through the Icarus support and resistance level as well. We can see here further back in time, we've got reaction here to this lower weekly level, a close up above, and then fairly strong movement through these hourly bands until we then start to get into this particular point here where there's quite a lot of consolidation. So you can see how these work quite well. Again, we've got resistance here on the hourly, the pink line, so the daily being the pink line. These particular settings don't show an entry at this particular point, but if we extend it out, the reversals indicator, just for an extra few days, this one's set to a default at 15, which we will stretch out to say 30 or 35. We'll see then that as price then drops through, closes through, it then continues off and then powers through and starts to react at these particular levels. So you can see that the reversals indicator shows up quite commonly around these support and resistance points. Again, you can see it here. Price moves up quite quickly through and then continues up fairly uninterrupted to the next Icarus signals support, auto support and resistance line. Just a little bit of an extra tidbit there for people to have a bit of a look at relative to the usefulness of the Icarus auto support and resistance levels indicator when used with some of the others. We'll delete this one off for the sake of the exercise, and we'll leave it there. We'll move on to, for example, the 1 hour Apple chart, which again we've done the very similar thing. It's a very, very strongly trending instrument, this one, as everyone knows, but again it still picks up these hourly levels really quite well. We'll scroll back a little bit in time, open up the settings so we can see what we've got. We've got 1 hour, 1 day, and then 1 week. Again, these will be the default settings that we load up on our charts most regularly. And we'll then go out to the daily signal. You can see after a huge amount of a run up here since March, where we're up, and it's just a ginormous amount. There was a split there in the middle, and we're sort of $80 north. That there are actually very, very few, if any, weekly levels, because the Apple stock just trends so strongly that it doesn't have points of swing where price will come back and visit. You can see it all the way back here from 2017 through to 2019. There's a little bit of a weekly price base there, but the rest of the levels are being generated on the hourly time frame and indeed the daily time frame, but still no daily time frame support and resistance levels until back in June when price started to react at this particular point here. So that gives everyone a little bit of an understanding of how they apply to different instruments. We've got IBM here as another example. Now, interestingly, on the hourly chart, we then have IBM with a weekly level right in the middle of two hourly levels. So this 121 seems to be a very, very key level for this particular instrument, which we've just dropped on the chart to give us a little bit of a better understanding as to its performance with the Icarus signals support and resistance. And oddly enough, we've got a weekly level at the very top of the range and the very bottom of the range, and it would seem that we're currently almost directly in the middle, which is not something we'd noticed before, but it's $330 thereabouts from that particular point, and $31 at that particular point. So it seems that IBM, just as a matter of technical interest, will be something to certainly keep a close eye on, because it seems to be wedged in there, pretty tightly, with a range of other hourly levels above, something very, very light below, and then anything below this 118.52 would suggest that without much support or resistance levels being generated, that we're back down to 90 in fairly short order. So that'll be something for us to keep a little bit of an eye on. And we have a range of other different Icarus systems, Icarus signal systems, which trade equities and ETFs and futures on a range of different exchanges. But we've just put this onto the screen to give us a little bit of an understanding of its application, fairly broad application on a range of different instruments and timeframes. So hopefully everyone got some value out of that. Now feel free, of course, to either jump onto the Icarus Signals Marketplace webpage and download your free trial, or go to the MQL5 community and look for the Icarus Signals product pages, which will be linked in the YouTube video comments below. There's also these indicators available in NinjaTrader, which will probably record some different videos for specific to NinjaTrader later down the track. But at this stage, for the sake of simplicity, all of the inputs, all of the code is all identical between MT4 and NinjaTrader. So depending on which platform you use, those will be available for users of both, operating in exactly the same way. So we hope you found that useful. Feel free, of course, to send us a note, leave a comment in the comments section below, like the video if, of course, you liked it, and we look forward to hearing from you if you have any questions or any comments, and wish everyone the very best of trading and investing into the future.